Yeah.
Okay. Well, hey, I had a second question for you.
All
And
right. Go ahead.
this is something I've seen recently. So I'm going to share my screen with you just real quick, just to show you,
Sure.
because I know um, I'm getting bombarded with it. I know a lot of people out there are getting bombarded with it. And let's see, there you go. You should be able to see just some ads
Oh,
there.
yes.
Okay,
Oh.
so
Mhm.
it seems like probably a year ago or so, everything, all the ads you'd see there on Facebook or YouTube they talk about getting funded, with these so-called prop firms, where
Mm,
you can basically pay for a simulator. But now
mm,
I've noticed, especially in the last couple months, it's all AI. Everybody's talking about trading with AI, and there's one, two, three, five different either videos, where they talk about trading bots and stuff, and they make it sound like this is the holy grail. And if you're not using AI to trade, whether it's futures or whatever, stocks, you're losing out. And the more I see it, it's one of those things that you're like, I doubt it. But I'm curious what your thoughts are on just all
mm.
this AI stuff.
Maybe. Yeah. Thanks for taking this picture away again. Maybe I'm a bit cynical here. Now a disclaimer. I've got some courses that I sell on Quantra on AI for trading, on one on reinforcement learning and one on portfolio management. So I just want to say that. However, this is really important. Um, there is one thing that is using AI for specific purposes, such as portfolio management and tailoring uh, a system to fulfill a specific purpose. But there's another um, claiming that you have something that actually, is a bot that makes you all the money in the world. There is an inherent flaw in that way of thinking. And let me start with this, and then I explain to you also why I think that AI is not a silver bullet by any means. Far from it. It's good. It's a tool, but not a silver bullet. So first of all, there's an interesting analogy that John Maynard Keynes came up in a long time ago, more than 60, 70 years ago, I believe. And he's a famous economist, and he had something, you can look it up on Wikipedia. It's the Keynesian beauty contest. And what he said is, okay, if you have a beauty contest and you rank the participants in terms of their attractiveness, and you do this from city to city, what you will find is that the distribution of what people rank is quite stable. They say, oh, that's number one, that's number two, and so on. And you can go from one place to the next, and people more or less will choose the same, right? But then if you go and you ask people what they think everyone else thinks, um, is the most attractive, suddenly this distribution will be totally chaotic. Every place that you try it again will be totally different. And when you think about it, the markets are quite similar. What the markets do, or what you do with trading, is you're really judging what everyone else thinks
Hmm.
is the most attractive investment, unless you're perhaps Warren Buffett, or but let's say stay with us traders. We're usually less uh, we're diving less deep into the fundamentals. I mean, they all have their purposes, but what we're really doing is we're looking at what everyone else thinks is the most interesting. And so what happens is the distributions of what happens become very unstable and chaotic. And a very famous mathematician, Benjamin Mandelbrot, who with the Mandelbrot set, those interesting fractals,
Right.
he called that the type 2 chaos. He basically speaks of the first case where People just judge what they think fundamentally is the most interesting. It's what's called a type 1 chaos. And when you have this self-referential chaos where everyone thinks about what everyone else thinks, it's called a type 2 chaos. Now, AI is really good at handling those type 1 scenarios. And when you look, for example, language or images or something like that, they're fairly straightforward and they don't change. A cat is a cat and a dog is a dog. They
Right.
don't change. And so is language. It's changing, but it's changing slowly. But when you go into, say, trading, the markets the rules change, the opinions change. The way people trade changes all the time. And the AI systems that are specifically tailored to deal with, let's say, language, they're not suitable for this sort of thing. Now, when you actually look at those AI models that are very successful today, and it really, I think, started with AlphaGo, where they applied reinforcement learning to the game of Go, which is arguably the most difficult board game in the world. They tailored that very specifically to that game of Go. And when you look at large language models, they're not like some AI. Like they seem like an AI that could do just about everything, but that's not true. That what they really good is it responding back to you in words that you most likely approve of, and you think, oh yeah, they're great. That's just how they've been trained. That is called
Right.
this human-assisted reinforcement learning. So they're really trained to basically deliver an answer that is pleasing to you. And so that's why it looks like it's so all powerful and all wisdom, like it's got this infinite wisdom, which actually is not the case.
Yeah.
And that becomes abundantly clear in the markets. And so it's quite interesting when for example, I did this training. I trained a neural network, which is now called an AI, with a reinforcement learning system. And I used there's this thing called the reward function. It's basically telling you, well, what is the reward you get for taking a certain action. And so, for example, if you say, well, I buy here and I make 0.1%, so my reward is, let's say, 0.1. So if you tell the reinforcement learner, okay, this is your reward function, it's pure P&L, it's just the profit you make.
Right.
Just trade the S&P 500. What's interesting is the reinforcement learner will actually just not trade. It will just buy and hold. And you go,
Okay.
well, this is a bit dumb. Like it doesn't actually trade. Now you go, well, is this just being the reinforcement learner be dumb? Or is it, because for example, you look at Warren Buffett, who is arguably one of the most successful investors
Right.
out there. He says the same thing. He says, well, just buy an index fund and hold it. And you go, well, is the system really dumb or is it actually really smart?
Right.
We can't know. And the funny thing is, you can't even know. You don't know
Hmm.
what's right and what's wrong. Now, I look at it, I'm like, okay, I could interpret it as really smart or as really dumb at the same time. Now imagine there's people that build those systems. Well, I don't even believe they're really AI, what you see everywhere on the internet. And they release them to the public. Now, there's some really smart people out there building systems like this or trying to build systems like this. And they look at them and are like, I don't even know how to interpret the results, like just like in that simple case that I told you. Can you imagine that's just released to the public and people look at this and they go, well, doesn't make any sense. What
Right.
are you doing? Um, and the reason is it doesn't make sense because it doesn't really make sense to anyone. Like it could be one way or the other. It could be smart, could be dumb. Like it depends on the time frame you look at. There's so many variables. But most of all, the fact that you don't really even if you build the system yourself, you don't really understand what it's doing. um, how can someone using the system even have a chance? And what happens is they're exposed to something that is inherently almost impossible to understand.
Hmm.
So so I'm I'm extremely skeptical, and this is probably the most positive take. Um, I think there is a place for neural networks or AI in trading, and I run some courses where I give people examples. But what's interesting there is often, the gains from that are often not like really big. They are at best marginal. And what you see often is if you actually train an AI to trade, and you don't train it like in a really, really super high, extreme supercomputing cluster, often the trading system converges to something really simple like trend following, or really, really basic like moving average crossover
Hmm.
dynamics.
Hmm.
Um, you know, and then you may ask yourself, well, why do I use all these computing resources? I can do the same in a much simpler way. And
Right.
I think that the big takeaway here is that whatever you do, nothing replaces your own research, your own digging, whether you use AI or not. It makes really no difference, right? What's most important is you've got to do your own research. You cannot rely on someone else. If you have something you don't understand from someone who themselves don't understand what it is, it's the blind leading the blind, effectively. And you're always better off doing your own research.
Yeah, that's good point. It's interesting you say about neural networks because I remember when I first got into trading, this was around like the early 90s. I mean, so that's, 35 years ago or so. I remember hearing about people saying, "Oh, neural networks, this is going to be it. All trading is going to be used with neural networks. And it's going to be great and everything." And I played around with it a little bit back then, and I was like, I don't really see it. And it's funny that now, 30 some years later, we're still talking about it, but they didn't talk artificial intelligence really back then. Now they're
Yep.
talking about that. But I don't know if did it I ever I don't know if I ever told you if you ever saw I did a just a sort of a chat GPT type study.
Oh,
Um,
yeah.
so what I did was um, somebody had reached out to me and said, "Hey, I can create something like Chat GPT that takes all your books, all your videos, and makes this model. And then you can ask it questions, and it will answer like I would answer, right? Because it knows everything about me trading wise, supposedly.
Hmm.
So, but this guy wanted like $20,000 to do it, and I'm like, eh." So I was talking to my son, he's just starting university this year, but he's a computer science major, and he's like, "Oh, Dad, I can do this easily." And he put together something and fed it all my information, so all my books, everything
Hmm.
I've ever written, pretty much. And
Hmm.
what I did was I had a live webinar where people would just ask me questions and I would type it into this bot, this AI model, and we'd see what answer it gave. And then I'd give the correct answer, what I really thought, and then
Hmm.
we'd grade it. And it was funny because it like I think in all my books I dedicate them to my kids and I give my kids names. And
Hmm.
you know, somebody asked, "What are your kids' names?" And it came back and it said, "Kevin's kids' names are this, and this," and they were all wrong. And I mean, it wasn't even, I don't even know where it came from, but overall, it came out with like 50%. That was its average. It got 50% of the questions right, about 50% wrong, but it always sounded like it sounded so great. It sounded
Yep.
so authoritative where you were like, well, this has got to be it. It said it. And even I was like, wow,
Hmm.
this sounds better, more convincing than when I would say it. But so it's kind of
Yeah.
interesting. So you say the same thing, but I think that was a great example of trading with the type 1 and the type 2, how it's different. I mean, it's one thing to look at the gold market, for example, and say, oh yeah, based on all these fundamentals, the market should go up, and maybe an AI could tell you that, but it's not going to tell you necessarily how to trade it because of all the market influences. It's almost like what is it, the Heisenberg, at least to me, the Heisenberg uncertainty principle, or where you the
Yep.
fact you're trying to measure something changes what it is, or changes
Mm.
the results. I think that's my simple version. Of course, you're a
Well, actually, this is an interesting point you raise because actually, if you look at say Heisenberg, right, or the quantum physics, you've got energy levels, right? Say, for example, for electrons, right, and then they jump with a certain probability between them, but there's no certainty, right? They do this. Actually, look at the bid-ask spread or the markets, right? You've got the levels, your price levels, and then you've got these jumps in between. And they're also discretized, just like in quantum physics. You can see there's actually some really interesting analogies here.
hmm,
Um, so, and there's some probabilities, some statistical, stuff, but it's not that far-fetched to think, wow, actually, maybe markets are fundamentally not like quantum physics, but they may have similar maths than quantum physics.
yeah. And what's interesting for those of you who don't know Tom's background, and you're like, this guy's talking about physics. What does he know? You are actually a theoretical physicist, right? I mean,
Uh,
that's
I'm not I'm an expert. I did my PhD in experimental physics, but
okay, experimental, but it's
obviously I
still
need to know a little bit of
okay.
theory.
Yeah, so I mean, you really know what you're talking about, and probably most people, like I said this, and I've said this every time we've had a conversation, is you are the most unphysicist-like person that I know who's a physicist,
Oh.
because you can take something that, most physicists that I've ever talked to, professors and stuff, they're like way out there, and you can't understand, I can't understand them. They lose me. And you're able to take something that's like super complicated and just boil it down to something really simple. So um, I mean, that's a credit to you that you can do that, that your understanding so good. But that's kind of interesting that, yeah, for some reason I thought you were a theory, but experimental, it's still all the
Or
same classes
you still need
I barely got through, and
you
you
still
know,
need to know a little bit of theory. I mean, I'm
yeah,
my physics is pretty rusty, but I think what's important is, like we all have simple brains, right? And it's always nice to boil it down. When people make things a bit too complicated, I mean, some things cannot really be simplified that much, but when they're too complicated, then they probably don't know themselves what they're talking about. Oh, well, no, that's a very sweeping statement. I take that back.
so
Um,
really what it comes down to with all those ads that people see, and it's your opinion, it's probably my opinion, that probably 90, 99, 95% of that's just
yep,
maybe they've done something where they said, well, that's sort of AI like, so we'll call it AI bots. And it's more of a marketing thing than actually
yep,
something that will be useful to them. I'm pretty sure you agree with that, right?
yep. Do you know the idea of you probably know martingale betting, right? When you
Yes.
double down on your
Yes.
losers. So there was an interesting paper that came out recently, and I showed you that,
Yes. Yes, you
um,
did.
about, you can actually just basically put on random trades and use martingale betting, and you can actually achieve a really good performance over a certain stretch of time until you get wiped out. So martingale betting is mathematically guaranteed to wipe you out. But up to that point, you usually achieve a performance that looks really, really amazing. And so what a lot of these people do, and it's funny because I was just at a little party the other day, and I talked to a guy who told me about something, and he said, "Yeah, this guy's they're selling an amazing AI bot, and the performance looks really good." And I said, oh, I said one where, where they double down when the positions are losing. And he's, yeah, they explained that really well, and they double down and then they make it all back. All right, that's a scam. You can't trust that.
Yeah,
And you don't need an AI bot to run it. You can actually just use a random number generator, and it will
right.
actually do exactly that. Um, and whether you could call the random number generator AI, if you really wanted to.
Yeah,
But really, I guess most of these systems that you see out there, they're really based on what's called martingale betting, because you produce these really nice P&L curves that reel people in, and maybe you run 100 of them in parallel, and a lot of them will drop out after some time, but some of them will persist, and that's what you show people, and they go, wow, this is incredible, and they jump on board, do it for a while, achieve really good returns until at some point it just blows up. But while they're doing it, they have already told a lot of other people that this is a really great system, on social media, and then they get on board and they get another one of those systems, and that
yep,
system may actually last a bit longer. And so the people who put out these bots, they keep the flow of people going that run with them, collect a lot of fees from the broker, and that's how it works. And unfortunately, that's the reality of a lot of those AI
yeah,
bots. Take it or leave it. And I'm not saying they're all like that. There's probably some really honest people there, but I mean, I always say people just be careful, do your own research. I'll show you how it's done. I show you how to do your own research, and then you do it yourself.
yeah. And that's
It's always
uh,
the best.
we're exactly on the same page with that. The that paper you showed, and I'll probably put a link to it in the like descriptions, so just so people can follow it. It was really interesting. It reminded me a little bit, not the Martingale part, but about there was a part of the paper that talked about, hey, turning it into a business that's sort of a
Mm,
scammy business. It reminded me of the story of the stockbroker who sends out recommendations for stocks, and he's basically going to send out a postcard to everybody: buy Tesla, buy Nvidia, whatever. But
mm,
what he starts out with like 1,000 people, and 500 he says buy Tesla, and 500 he says sell short Tesla. And then after a
mm,
week, the one that did good, he concentrates on those 500 and tells those people, here's my next pick, and tells
mm.
half of them to buy, half of them to sell short. And he
Yeah,
keeps doing that like 4 or 5 times. But
yeah,
at the very end, he's left with maybe 10 people, or whatever it is, who have seen him send these postcards every week, or emails now, I guess it would be, and said, wow, this guy's hit on his last five. He's a
mm,
genius. I'm signing up. And yet all he
mm,
did was, he just threw away the losers. You weren't, if he lost with you, then you didn't get that final card. But
mm,
yeah, I tell people all the time that there's so many shenanigans going on. There's so many just unscrupulous people selling like trading info and trading education. And I'll tell you, it even gets to me, because I'll have a down day or a down week, which happen. I mean, that happens. You don't make
of
money every
course.
day. I'd love to, but you don't. And then you just happen to be on YouTube and you see an ad and you see some guy saying, I make money every day.
Yeah,
You hear it enough, you start to get sort of like brainwashed, where you're like,
yeah,
well, maybe there's something. And then I know your mind always plays trick. Well, this guy's saying he can do 100% a week. Well, I don't know. That's unrealistic. But what if it's 20% of that? So maybe
mm,
I can make a quarter, 20% a week. Oh, well,
yeah,
and your mind says, oh, that's a lot more realistic. And so maybe this guy, it's fake, but maybe there's something to it. And you start to fall for that. And
I know.
yeah, but I agree. It's what I always tell people: do your own research, do your own testing once you know how to do it, uh, and know how to analyze your results. Because I think a lot of people get fooled, but
Mm.
That's one, you're gonna feel so much more confident because you're gonna say, well, I did it. I'm not relying on even Kevin or Tom to tell me,
Yeah,
this is it. I've done it
yeah,
myself. Um,
exactly.
but it's
You know,
really
we have,
hard.
I know it's hard. And the funny thing is we have a tendency to follow authoritative language. You know, when you mentioned ChatGPT, you listen to that and sounds really like, yeah, this is it. And we go, oh, yeah, it must be it because it sounds so authoritative.
Yeah,
Or someone who's a really good speaker on YouTube, probably good salesperson, sounds like speaks with this real innate authority, and we tend to trust that, and we get actually fooled by it, and then you listen to nerds like myself or whatever, and you go, well, they speak a gibberish, it can't be trusted. Um, and and so it's our funny tendency to follow that. There was an interesting experiment once. They took a group of fish, and they took one of the fish. They took the brain out, or the I don't know. They did like a lobotomy also, and the fish just went crazy and just swam like totally around. But all the fish followed that fish that had a lobotomy because the fish was just so confident in what it was doing that
yeah,
everyone else followed. And as humans, sometimes we're a little bit like that, and it's interesting. It really reflects on trading as well, like how we perceive the world, the trading world, the finance world, and what our decisions should be.
yeah. That's
Um,
interesting.
I find things like it very fascinating.
Yeah,
But
probably in our world, it's I think the fish with the lobotomies, I think we call them politicians, right?
you know,
Yeah,
I'm sure we all have our own opinions on that. But
yeah,
yes, I mean, when you look at it from that perspective, there's some really interesting thing. But what's really good about this is if you become aware of that, you can actually make really good decisions to your advantage. I mean, that's what, it's no point being bitter about it or say,
right.
oh, this is all bad. The big question is, how can I actually use this to my advantage? And I think the really good traders, in any age, even in the 18th century up till now, they've always seen this behavior, and they often, saw through it and then went against it. No famous, really, if you read Jesse Livermore's book, Reminiscence of a Stock Operator, I think it's called.
Yep,
How the way he looked at the world and the way he thinks was a really good early account of that thinking. That you look at the people with the quote unquote lobotomies, and you go, okay, well, how can I take advantage of them? And
right.
obviously, he's got wiped out a few times as well, but he nevertheless was quite successful too.
Yeah,
So, um, I mean, it's not to say that you should never trust any of that, but I think it's interesting, or it's important to see through the hype and actually see what's really there and how much substance there really is. And
yeah,
yeah, I think you can learn a lot from that and make some good decisions.
yeah. That's a good point. Well, hey, I know we could probably go on forever, but
Sure.
I guess if people comment and ask questions about this video, maybe we'll do this again sometime because this has been a lot of fun. It's always fun
Yes.
talking to you. When you and I spent time together in Australia, that was once we met in the offices of that broker. I was like, "Oh, I got to try to spend as much time with Tom as I can just to suck up his knowledge because I was kind of thinking they'd have some kind of fake kind of educator there, and I saw you, and within like 5 minutes, I'm like, oh, this dude's for real. I'm like, this I need to talk to him. So hopefully other
Yeah.
people listening have enjoyed our conversation, and it's I know I have, and I always learn a lot just talking to you. But
Yeah. Thank you. I mean, same with you. You've got really great ideas, and you're really able to make them understandable to a lot of people because these concepts are really not easy. And I think what you said is great. If people comment and they say, "Hey, could you discuss that?" Maybe we just do it again.
Yeah, yeah, that'd be kind of
And
neat.
you know, I think it's nice to have these conversations because it's a less formal, and people get a lot out of it.
Yeah, yeah. Well, hey, all right. Well, I'll let you go. And yeah, like I said, people like this, just leave comments, leave questions, and we'll go from there. And of course, if nobody comments and everybody gives thumbs down, then maybe just you and I'll talk without
We'll
showing
we'll
anybody.
leave it
Just
there.
keep it a secret conversation or something. But
That's right.
all right. Well,
All
hey,
right.
thanks, Tom. And
Thank you.
all right, we'll see ya.
And we'll see you soon. Bye.